Hi there, welcome to the week ahead with Pivot Trader on the 29th of November. What a difference a week makes, hey? Last week we were chatting about the US dollar rallying, the effect it was having on oil, gold, and Bitcoin. And fast forward a week, and all of a sudden all hell has broken loose with this Omicron variant of the COVID virus, and stock markets getting hammered all over the place. So I'm sure you're wondering what's next. So let's dive in and get a bit of a sense of what's going on in the charts, despite the fact of the panic that we're seeing. So starting off with this S&P 500 futures, first thing I want you to note is we have the weekly chart here, and this weekly trend with that 10-period exponential above the 20-period simple, still well and truly intact. That 10-period exponential well above the 20-week simple. So the weekly trend, still fine. Looking at the candles for some short-term signs of what's going on. Last week was the highest price in the move. So we don't have a weekly sell pivot yet. If we get a weekly close below the low of last week's range, so let's say we rally a bit this week and then sell off, then we can start getting a bit more bearish on that S&P chart. But for the moment, there's nothing really saying technically that this is bearish. Prices have come back to support around that 10-week moving average and could bounce right off it and rally again from there. So yeah, from a technical standpoint, there's nothing here to say it's time to panic. Moving on to the ASX 200, and it's a slightly different situation for me. I am slightly bearish on the ASX 200 as it stands now, technically, mainly due to the fact that we did get a monthly sell pivot confirmed last month. So that's my first sign of momentum potentially shifting down. And we have seen resistance up towards the top of that candle, which is where I'd expect to see it. And so it is just the early signs. And another reason why I'm a little wary is we have that old high prior to the COVID crash. And you probably know that I look out for these moments when price action tries to break out, and if it can't carry on, and we get the false break, we can get a momentum shift and a mean reversion, probably back to that 20-month moving average, this being the monthly chart. So that could still be on the cards. The setup is there technically, and of course you've got the old high from 2007 as well. So basically from here, things may hold in there short term. It's not breaking through levels where I think momentum will really shift to the downside, and I think that's more sub 7,000. That would take it below the low of that monthly sell pivot candle, and also sort of confirming the false breakout from that 2020, early 2020 high, and also would be heading back below the 10-month exponential, which is support. And often when that 10-month exponential is broken, it can sort of have quite a sharp decline. So, things are there saying just to be a bit wary, but we haven't broken through really key support zones yet. So the market may just hold in there into the end of the year, and who knows, could end up negating that monthly sell pivot and take off again. But just where it is right now, I'm just not overly bullish. I think we've had a really good run, and with this news about the virus, even though it may not be some sort of huge game changer where we're all going to get locked down again before long, it could just ignite a bit of selling into the end of the year. We've had a good run for a long time. A lot of people would have good gains on their books. If we do turn down, break through 7,000 at ASX, it could just see an end of year trying to protect gains. You don't want to see half of your profits disappear in the last 2 weeks of the year. So that could just be a catalyst. The technical situation is there. So that's why I'm just a little wary of the ASX and, that Aussie dollar really getting hammered. Potentially there could be offshore selling at some point if that Aussie dollar really does get hammered. The US dollar being strong, commodities selling off, which doesn't help us. So from that point of view, maybe we're going to underperform the US, and the charts certainly leaning towards that view. We looked at oil last week, and I was saying since we had retested that 2018 high and was getting rejected, weekly sell pivot was in place. I was saying, look, there should be more downside in oil in the short term. And look, it really accelerated, didn't it? A massive smashing there. So perhaps we're in for a bit more downside in oil. If it does crack below that last low in the uptrend, just looking at the wave structure to the upside, that is the highest low in that trend. So that's a pretty important point. If it busts back below that low, it's looking a little dangerous. And, maybe it needs to do that with this fear around this new variant of the virus. So it is set up where that could actually take place. So I'm a little bit wary of oil right here. So yeah, we just got to wait and see what the news is, whether we're going to get locked down again and all that sort of thing. I doubt it, but it's a fast-moving situation. So if they do say that the virus is, maybe as deadly or a bit more, and it's spreading like wildfire, there could be a bit of panic, and who knows, we could be in for a bit of a dramatic fall. But this sort of move in oil, taking the heat, I guess, out of inflation expectations, that could take the heat off the Fed with their taper. Everyone was expecting that the taper would actually be accelerated in December. Maybe that's off the table now, and perhaps they will soften their stance to taper, which could ignite a rally in stocks again. So those bonds really rallying strongly. That's the big news looking at these US 10-year bond yields. If we look at the daily, my view remains that above that sort of 1.8% level, which was the high in yield reached in April this year, then watch out. But if that level holds, and things start to turn down again because of this virus, everyone flight to safety, that fear for the market is off the table for a while. Inflation is hot, but if commodities collapse, oil collapses on the back of this COVID thing, the Fed backs off, and bonds get this big safe haven bid, that's going to change the situation. So that's the biggest news from last week, is this flight to safety, and the bonds moving from, up around 1.65, 1.7, which was, 10 basis points below that 1.8% region where I think rates could really spike, and it's turned back down very sharply. So that's a big change. Have to watch how these bonds perform over the next week or two, because that's the thing that was most worrying me, was that the bonds could really sell off, because with inflation so high and 10-year bond yields at 1.5%, I thought the risk was we could see investors decide that wasn't enough yield for them. So that's a changing story, changing the outlook. So that could support things a little bit if rates do continue to fall over in the US, and collapsing oil prices will help that as well. So that's a big change from last week. Gold has certainly had a tough time of it with that US dollar spiking, and we were looking at this whole correction over the last 15 months and just making calculations off that. The point of control coming in there around 1875, 1877, and the high of this move was bang on that point of control. So it looks like we're looking at the right zone. So prices have pulled back right to this buy zone area again. You'd want it to hold this area, which is around that sort of 1730 to 1780 region. You'd want there to be buying in that area. I think that gold should catch a bid, but perhaps if inflation expectations go down, the real rates aren't looking so negative, perhaps there's a reason for gold to come off and US dollar strong. But I think ultimately it will turn back up and we'll find support. It's really looking at this little trend we've got on the weekly to the upside. It's only in its early stages, but back below 1760, and it's starting to look a bit more dangerous in the short term. We've got a weekly sell pivot in place now, so that just means on this rally there could be selling pressure up in the guts of that candle, and then it could turn back down again. So the weekly situation looking a bit negative, and the overall structure really of gold is that this correction isn't necessarily finished. This really is the structure we're looking at as far as the downtrend, and that is all still intact. So we could still be facing another leg to the downside, because prices really need to bust out above that sort of 1960 region, which is actually the lowest high in that downtrend of the correction, before I will be feeling, this correction is over and we are starting to trend to the upside again. So the correction's still in play. That point of control is resistance. So now we just need to see whether the buying pressure steps in again in the buy zone of that wave. And if it does, then we might be on to bust up through that point of control, and that's when we get the targets up towards that sort of 1980 to 2020 region, which is the sell zone of that whole correction. So I reckon that's what's on the cards. But look, it's a fluid situation, isn't it? There's so much going on. You've got to be able to accept whatever the market does and react to it. So keeping my eye on gold now that the weekly sell pivot's in place. And finally, with Bitcoin, was saying last week, we've got the weekly sell pivot in place. So I'm a bit nervous because it has had a double top based on that high we reached in earlier this year. So you can have the false break, and if things turn down, it can actually be quite a major high. That's sort of a double top. So just wary of that. We did see more selling pressure over the week, but again, often you'll see a bit of a rally up into the guts of that weekly sell pivot candle. And if the selling pressure's there, that's when you've got to worry. If it then goes and busts below that low from last week, watch out to the downside. So things are showing you that the selling pressure is about in Bitcoin, and just negative on those weekly charts for now. So that's it for now. We are opening up weak and rallying, but we do have, this being the ASX 200, last week was a weekly sell pivot, and we've also got the 10-week exponential crossing under that 20-week simple. So things looking a little bearish in our market. So we could rally, but then meet selling pressure. And if we bust back below those lows from a few weeks ago, below 7,000, that's when things can accelerate to the downside. Keeping an eye on how things go, because it can actually turn pretty negative pretty quickly, but it's not panic stations yet. All right, cheers. I'll come back with more next week.